LSE, we are greatly honored to have Mr. Jingdong Hua, Vice President and Treasurer of the World Bank, for a special fireside chat on Africa's future in global development. Jingdong, you're a Chinese, I hope you don't mind me mentioning, who has been brought to the center of the global multilateral platform, but also your career happened to start with the African Development Bank. So what have you seen over the past decades through your multilateral career about the transformation in Africa?
Professor Yu, thank you so much for the invitation, and I'm honored to join you to share some of the work that we do both in China, but also in Africa, and share some of my perspective. Indeed, I happen to have some say in a topic like China and Africa because, the first almost 30 years of my life I spent in China, my childhood, my formative years. But then I started my international career in Africa, lived there for 3.5 years. And then later when I joined the IC, I certainly visited Africa more than any other continent. So it's a continent where I have a lot of affinity and passion about. Now, just very broadly speaking, first of all, as the World Bank just celebrated 40 years of relationship with China, we certainly can say that China has been an outstanding success when it comes to development. From the time that China opened up in 1978, China has had a tremendous achievement, and in that journey, the World Bank is very happy to be a very supportive partner. I just got this information. I just wanted to mention that we, in the last 40 years, we have invested in over 430 projects in China with a total amount of $64 billion. And certainly witnessing and supporting China's development plan. So from a poor country to a higher middle income country and continue to grow, it's certainly a model where we can draw a lot of lessons, including for Africa. Now, when it comes to Africa, the way I look at it is that I can tell you about, from two sides. One is anecdotal. The other is what we can see from the World Bank side. Anecdotally, I work in Africa in the early 1990s. And at that time, China was still in the early journey of development. And Africa was actually trying to go beyond civil conflict. As a matter of fact, when I was living in Africa, many countries were in civil conflict or regional war. I can mention, I lived in Abidjan. This was 1993 and 1994, all the way till 1997. You have wars in Liberia, in Sierra Leone, in Angola, in Mozambique, and then you have regional conflict in Ethiopia, Eritrea, and of course, the very, very unfortunate genocide in Rwanda and in Burundi. So if you put, the development journey in that context, Africa had only started to focus on development at a later stage than China, right? But, I'm happy to see that in the last decade, Africa continent, if you look at sub-Saharan Africa, which has 48 countries, the vast majority of countries have been making progress. They are peaceful. They have turned their attention to development, right? But of course, it's 48 very different countries with their own culture, history, so on and so forth. So I think it's a journey that we are traveling. But here, let me also turn institutional. That is, what are the successful factors that China did that could be of relevance to Africa, right? So let me quickly mention 4 areas, and maybe we can expand a little further in later Q&As. But the first is that China's early decision to open the country up to trade, to take advantage of the vast pool of labor, right? To do manufacturing, to export, to earn foreign exchange, and then turn it into resources to finance China's development, right? So that is something that China did very well. Africa, recently has launched a continental free trade agreement. which means that within Africa region, trade will be, will be much easier to be facilitated. I think that's actually a great momentum, and certainly the World Bank and many other international organizations are helping. But that is then leads to a second issue, that is infrastructure, right? Including, roads, transport, ports, telecommunications, so on and so forth. The fact that for a long time, it is cheaper to ship something from Shanghai to Mombasa, which is a port city of Kenya, then it is then take that container from Mombasa to an inland country like Rwanda and Burundi. That really speaks volume about the urgent need for Africa itself to build infrastructure so that the trade can be facilitated, right? Now, what is the difficulty? A lot of people, when I mention the following, really don't get the concept. I said, the map doesn't do Africa justice, right? Because it's a northern perspective of the world. The actual size of the Africa continent. How big is it? Well, I tell people, if you drop the United States into Africa, you drop Canada into Africa, then you drop into China into Africa, Africa continent is still bigger than the three countries added together. So you could appreciate the vast landscape and the expense and, to build infrastructure. But nevertheless, that said, it is a big priority, right? For Africa to take advantage of the natural resources, its labor force for manufacturing, so on and so forth. So this is the second. The third, I think China did very well, and I was a beneficiary, is that China focused a lot on basic education, basic healthcare. Right. So when I was growing up, education is very much emphasized because that's actually a foundational piece in terms of giving people the knowledge, giving people the skills to participate in a productive, development. And therefore, the World Bank actually spends a lot of its partnership with Africa on education, healthcare, so on and so forth. The last thing I wanted to mention is financial market. That is, for development to happen, you really need the financing. And all of the international development assistance, whether it's from the World Bank, African Union Bank, from AIIB, added together is a very tiny part that is needed, right? In the case of China, China eventually developed the second largest financial market in the world after the United States, right? So China's bond market is now $15 trillion. China's equity market is 10 trillion, right? So when you develop a vibrant financial market, you then have an efficient way to recycle your domestic savings and grow that domestic saving as a primary source of development financing. So these are the four elements I like to mention. But let me just say, in concluding this first question, is that, when I was in Africa about 30 years ago, you travel around in Africa, when you go through an airport, sometimes you run into difficulty, right? Whether it's immigration, customs, or even the basic infrastructure of the airport itself. But now you travel to Africa, you go through, immigration or the border, and you go through a very well, nicely built airport. It's not different than going through other airports. It is one sign that Africa is progressing as the rest of the world is. So let me just stop there, and I'm happy to answer more questions.
It's no doubt that if we just open up the IMF statement, it says that, well, Sub-Saharan Africa has the 5 of the world's poorest countries. I think that is just factual. But also, Sub-Saharan Africa has the world's today fastest growing economies, such as Rwanda. So what are some of the other exciting things that are happening in that particular region that you think that the world should know, but don't really talk much about?
Shirley, one of my last trips to Africa was really focused on fintech, right? How we can use fintech leapfrog some of the infrastructure needs. But before we talk about that, let's say that this COVID-19 really has posed a global challenge, and it really highlighted some of the challenges of basic infrastructure. For example, in the United States, in Europe, where you live, even if kids have to stay home, they do have broadband so that they can still, be able to log on to go to school. But where in Africa and many other developing countries, kids just are left at home and they have no access to education capability. So how do you make sure you have Wi-Fi, you have, cellular technology, you have telecommunication infrastructure so that people can benefit from the ability, even under challenging situations, they can still function as a society. This actually gives us, new hope that we can address this right now. But that said, so our immediate focus right now in the World Bank and broader global development community is how to help Africa to rebuild Africa post-COVID-19, addressing healthcare needs, addressing education, nutrition, women's health, reproductive health, a lot of things that is immediate. And then, of course, climate change, infrastructure, and many other things, private entrepreneurship, so on and so forth. But let me mention two things that I think are exciting. You're absolutely correct. Africa still has some of the poorest countries in the world due to very unfortunate internal civil conflict, wars, terrorism, lack of funding, so on and so forth. But you also mentioned some great successes in terms of including Rwanda, from countries that suffer genocide to one of the most vibrant economies in Africa. So in that aspect, Rwanda actually has a parliament that is more than half of their parliamentarians are women. They really have made tremendous program in social development, right? Making sure every citizen, including women, are full participants in decision-making, in national policy formulation, and in being productive, entrepreneurs, workers in the society, right? But equally importantly, that, when I mentioned the first bonds, savings bonds, that was sold through a cell phone is actually in Kenya. It is because Kenya over a decade ago, somehow enabled a cell phone-based financial inclusion strategy. Therefore, every citizen in Kenya was able to access financial services. So therefore, before M-Pesa, which is the name of the Kenya, fintech or fintech platform, only about 10% of Kenyans have access to finance. Now it's over 90%, and they have made tremendous progress. So these are exciting role modeling for other African countries, right? Because, when you talk about motivation, China, Korea, they are too far, or Singapore. But if you say my neighboring country, wow, if Kenyans can have access to finance, take advantage of leapfrogging using technology, if I'm another country in Africa, they will be motivated to do more. So we at the World Bank, we very much are working with them to use new technology to help Africa to leapfrog.
I remember a couple of months ago, I happened to have this conversation with a Nobel economist, Mike Spence. And so Mike said, post the COVID-19, going back to your question, Jingdong, that Africa almost certainly have to resort to a heavy investment-led economic growth model. So countries either have to borrow a lot or suffer a lot. But if countries do borrow a lot, from the World Bank's perspective and from your personal experience, how do African countries ensure that economic sustainability and the fiscal resilience?
Shirley, that's a great question. So the way development finance has evolved, maybe we need to take a step back, right? So in the, just post World War II, I think at that time, it was simply rebuilding. If you give money to build roads, bridges, factories, good things will happen, right? From that very simple concept of development to now a human-centric, sustainable development at the center of the development agenda, it's a tremendous evolution, right? So the way we work with African continent is that we actually, every couple of years, we sit down with the government. We figure out jointly what is the best strategy and what, depending on the country's background, its natural endowment of resources, and its current situation. So we have what we call a very comprehensive country partnership strategy, okay? So it's a partnership. It's not a relationship of we tell you what to do, right? Because we already have 7 decades of development experience. We don't have to reinvent the wheel. We learn from successes, we learn from mistakes, and we share with the countries those development experiences. That, based on the country's specific experiences, let's figure out, okay, the World Bank, what is the angle we can better help you? What are the things that you can work with other partners, so on and so forth. So first of all, the development plan is country driven. Second is indeed debt sustainability is critically important, right? Because you don't want a situation where you pile up foreign debt where the country cannot absorb, but then later became a burden on the country. So therefore, I think the World Bank actually raised this issue 2 years ago and was then certainly endorsed by the G20 in terms of, and this is because of the urgent situation under COVID, right? That how do we then fundamentally resolve the debt sustainability issue? However, debt is not all bad, right? Because when you are developing in the process of development, you need financing. You need, especially when your domestic financial resources not sufficient. You need investment from other countries, of course, naturally in foreign currencies to come in. Our job is really to make sure, on one hand, are those projects tangible? Would they produce a positive economic financial result, but equally important, positive impact on society, on the country, right? So debt sustainability goes into our analytical framework in working with the country. But of course, we have to address the legacy issues that those debt already accumulated, unfortunately, because of factors not caused by the countries themselves. For example, commodity super cycle, where a country relies on commodity export to have a steady revenue. All of a sudden, commodity prices collapsed and they lost an important source of revenue, and therefore they fell into a debt liability issue. So we have to address the outstanding debt sustainability issue, but equally, or even more importantly, going forward, we have to make sure that when we design financing, how do we make sure going forward the country will not fall back into indebtedness that would not sustain a positive outcome?
Well, the World Bank has been a leading example in delivering development sustainable goals in Africa, as well as other countries in the world. But today, I must say, though, Jingdong, the World Bank is no longer the only one that are talking about partnerships, or especially financing partnerships with Africa. So since 2013, we have seen a wave of multilateral institutions that are developed out of China. You have just mentioned about the AIIB and the New Development Bank, who are going to be at our conference joining you as well, but also Chinese development banks as well. Post the COVID-19, China single-handedly held 20% of Africa's total debt. And so will that percentage, you think, continue to grow out of China's balance sheet? And do they come into competition in Africa with the Bretton Woods institutions such as yours?
Well, Shirley, I had been very fortunate myself. I work in 5 different international multilateral development institutions. So certainly I'm thrilled to see more institutions are created to address the critical needs of development finance in a multilateral fashion, right? So having worked in multilateral system for the past 30 years, I very much appreciate, because multilateral institutions do represent the broadest consensus in terms of what needs to be done in development. What are the priorities, right? From building a policy framework that is sustainable, brings the country into transparency, zero tolerance to corruption, because these will build trust, right? And then, of course, making sure that sufficient financing goes into the country. The sad reality is that if you add up, AIIB, New Development Bank, us, African Bank, the total financial investment we can make is a drop in a bucket in the needs of Africa, right? Therefore, we very much welcome Mr. Jin Liqun, the president of AIIB. Certainly, he was my boss when we were working in the Asian Development Bank together, and I certainly have learned a lot from him. And AIIB, even before its formal launch, had a lot of interaction with the World Bank, and I'm very happy to say that partnership, in terms of sharing our experiences in institution formation, in sharing our successes or lessons learned, so on and so forth, I hope that had benefited the creation of AIIB and New Development Bank. Not to mention quite a number of senior staff from New Development Bank and AIIB came from the World Bank, came from other multilateral institutions, and we have done a lot of projects together. So let me just use one example to showcase the tremendous partnership we have done. So between the World Bank and AIIB, we actually did a great investment in Rwanda to support, increased credit to micro, small, medium-sized enterprises. The way it is done is that AIIB provided $100 million loan, and then the World Bank used our IDA, which is highly concessional resources, to blend in the cost. So the total cost in interest savings over the life of the loan for the clients is 18 basis points. It may be a small number, it adds up, right? And certainly that's one of many things we have done together. So we certainly welcome the creation of new multilateral institutions, and we believe we play a big role in this. And the World Bank has been, if I may say, very generous in sharing our knowledge, sharing our policy, sharing our experiences with the new development institutions. And I call Mr. Jin, my elder, and Leslie, who is a good friend of mine, who is the CFO of New Development Bank. We are a small circle, and let me say again, the total resources of ODA, Official Development Assistance, is so small compared with the needs of development, right? So there is no competition. It's only partnership and working together, and hopefully using our limited resources, not as a direct investment, but to build a investment climate so that billions and trillions of private investment will go to Africa and go to other developing countries. That's really our goal.
That is so indeed encouraging to hear that there is such a strong and trusting sense of collaboration across the institutions. But Jingdong, when talking with your colleagues earlier, two words really got stuck in my mind. One is your colleagues say, well, Jingdong is a true multilateral guy. You believe in multilateralism. And the second word I heard is that you are pro-innovation. I think you are not only pro-innovation in African countries such as Rwanda, you are actually pro-innovation in designing the World Bank products, financial products at the frontier of global development. However, I must say though, the World Bank today is 75 years old, and it itself as an institution needs reform and innovation. I know you have a huge responsibility. What is on your agenda currently to ensure that the World Bank itself as an institution can ensure that the sustainability and resilience as well?
We have been given a leading role in terms of not only to make sure ourselves, right? The World Bank recently said over a third of our direct financing must be climate. Okay, that's a tremendous commitment, right? And we're very much. But how do we then use our project as a role model so that it can be replicated as best practices to crowd in private sector investment so that that goal of $1 trillion every year gets achieved. So I think although we are 75, we feel very young. Now, on the finance side, look, the World Bank introduced the first swap transaction in the world. We issued the world's first global bond. We issued the world's first green bond. We issued the world's first blockchain bond. And we, this year, actually helped UNICEF to tap the power of capital market. The World Bank issued a bond where part of the proceed goes to UNICEF, backed up by the private donation to UNICEF. And that's really, really wonderful. So we stay on the cutting edge of finance, not for the sake of innovation itself, but to constantly find ways to introduce attractive solutions, good for the country, but also attractive enough for the vast pool of savings. A biggest example I want to give you is what we call CAT bond, catastrophe bond, right? So very simply, if I'm a finance minister of a country, and I tell the infrastructure minister that this year I'll give you 100 million in my local currency, you go build some roads, right? And then, unfortunately, an earthquake or a typhoon hits the country. You know, if you don't have insurance, what happens is that I will have to call the infra minister, say, sorry, the 100 million I've given to you, I need to take it back. Because now that money has to go to, humanitarian assistance to our citizens, right? Now, what have we done, the World Bank? We have introduced catastrophe bonds to help countries to mitigate those unexpected events, right? In Latin America, we have issued CAT bonds for quite a number of countries, several $1 billion. Recently, we helped Jamaica to do a bond, $180 million for 2 or 3 cyclone seasons. In the sense that when cyclone hits, right, and it's what we call parametric, meaning that if it hits certain level, there is an automatic payout to the country, so that instead of taking back the money building infrastructure, there is money from bond investors that will go to the country. So these are wonderful innovation. Hopefully one day will significantly increase private sector's participation. Now you would wonder why a private sector investor would buy a catastrophe bond where they could lose money. Well, for 2 reasons. Number one, of course, the insurance premium, which is a coupon of the bond, is much higher than a AAA rated World Bank bond that pays very little because of, so you get an extra yield, right? That normally you wouldn't have. The second is a CAT bond is not correlated to the behavior of regular fixed income bond. It's not driven by the Federal Reserve's announcement or inflation number. Therefore, Shirley, you're an economics professor, it achieves great diversification effect. So this is very exciting as a treasurer of the World Bank that we use innovation to scale up finance. So with that, Shirley, I hope I don't look 75 years old. In any event, the 75 is the new 30 years old. We are in our prime.
Jingdong, I cannot let you go with that, asking a question on behalf of our brilliant students at the LSE. I'm sure many students, they would aspire to have a career like yours. What are the essential skills do you recommend in order to meet the challenges of future global development?
Well, thank you. And certainly my best wishes to your students. The first answer is that being at LSE itself is a great start to go into development, right? Because it's a prestigious institution. It sits in London, which is one of the most important global financial centers. And look, I mean, it's very simple. You need to have a passion for development, and that passion then should drive you to learn a field that you find interesting, right? Whether it's economics, healthcare, agriculture, climate change, so on and so forth. Because you need to start using expertise, right, as an angle to help. Because the World Bank, like all the other multilateral banks, we address virtually all the SDG goals, right? With the ultimate goal of eradicating poverty and build a common prosperity for humanity. So have a passion, find areas of expertise as a starting point. Well, of course, while you are pursuing your academic study, find opportunities to do internship at institutions like the World Bank, the United Nations, the IIB, New Development Bank, and watch out for watch our websites and I think I would urge you to read our president's speeches, because that actually is very important in terms of where the international development thinkings are, and watch our vacancy postings and apply for jobs, right? And if you get turned down once or twice, don't be discouraged. We are very fortunate for every position we open. We do have many motivated candidates. But I think if you keep trying and meanwhile accumulate experiences, you are getting it.
Accidentally, I heard that, Jingdong, you actually wasn't selected for the first time when you were applying for a World Bank job.
I didn't even get a reply, and instead I started as a young professional in African Bank. And therefore, look, I mean, it really, actually, that's a great way to say, it really doesn't matter where you start. If you have a passion, you want to achieve something, eventually you will be able to achieve it.
You will get there.
Journey in that context, Africa had only started to focus on development at a later stage than China, right? But I'm happy to see that I didn't even get a reply, and instead I started as a young professional in African Bank, and therefore
you will get there. Thank you so much, Jingdong Hua, Vice President and Treasurer of the World Bank. We thank you so much for your time.
You're welcome. Thank you.